If we look at just where we stand at this moment, in 2022, the BOJ to intervene had to spend $62 billion, and it was successful because US Treasury yields were coming down at that point. That's not the case this time. If they did intervene, is it just throwing good money after bad?
Thanks. Good morning to both of you. I kind of agree with this point. Look, the issue they have is kind of, first of all, they're intervening in the context of a steepening at the long end of the US yield curve. And that is a worry in the sense that as long as that upward momentum is there from the US and indeed from the broader US yield outlook, that really means that their various interventions are going to be unsuccessful in the current context. What we saw last Friday from the BOJ was really giving us sort of, I would say, a dovish hold in the sense that whilst they kept rates on hold at 0%, they pretty much downgraded their inflation assessment for 2024 and then also for 2025. So when we look at what Ueda is doing, he's very slowly normalizing Japanese monetary policy, but he's doing so without any attendant yen appreciation. So in this context, really, as long as this paradigm continues of very softly, going on the monetary tightening side, alongside this rising sort of long end of the US yield curve, you're going to see dollar yen, in this predicament, this pernicious predicament which we have, and that basically puts us where we are at the moment in dollar yen. They're going to be forced, basically into a risk management framework unless and until the long end of the US yield curve stabilizes and eventually falls.